Are you acquiring shares of European banking today, or have you just given it up?
No, we're not giving it up. To me, this is one of the areas, a pocket, one of the greatest opportunities in terms of value around the globe today. Why do I say this? Because the share prices of banks have been hit by these low to negative interest rates, slow economic growth, and with these two macro conditions, there's been a belief that there would be a collapse in banks' earnings and financials' earnings in Europe. And of course, this has not happened at all. We have indeed seen a share price collapse over the last year. Prices are down anywhere from 25, 30, 35, 40%. But the strong financial institutions have been able to still maintain their earnings or even grow them at a slow pace because they make money in other ways. They have cut costs, they've increased fees, they've done things like increasing their asset management business, and credit quality has improved quite dramatically, believe it or not. So when you add this all together, you've actually seen moderate earnings growth in most of the European financials.
Right, but who should merge with who?
I don't think there's not a case yet for European bank mergers because you don't have uniform European banking law. And until you have that, I don't believe you should have these mergers within certain countries.
But Europe is also overbanked, right?
Europe is overbanked, and I think within certain countries you could see some more consolidation. You've seen a little bit of it in Italy. Yeah. You've seen some of it in Spain, where the authorities have said to these more smaller local banks, you're either going to merge, you're going to go out of business, or you're going to refinance. And this is the type of behavior you need. What is really needed in Europe is in Germany, where local retail banks cannot earn money because of the competitive environment. There needs to be some sort of local consolidation, I believe, in Germany.
Okay, given what you've just said, would you increase your stakes in Credit Suisse or Julius Baer?
Well, we think both of those companies, and by the way, they're not really exposed to the whole commercial banking loan losses things, because so much of their revenues and income streams come from wealth management. In particular, Credit Suisse is exposed to wealth management growth in the emerging markets in Asia. So both of them are top positions in both our strategies. So, I mean, we're nearly 7, 8, 9% ownership, and so we have been adding on weakness to these names.